Hello everyone and welcome back. Today I'm going to show you some trades I did on the 23rd and the 25th of August. These trades all are regarding the S&P. Now, as you will observe, I have added the 1 minute Nasdaq chart because it influences quite a lot the S&P, and in my previous videos the 1 minute Nasdaq chart was not added. I had only included the hourly Nasdaq, but it's going to be very helpful analyzing and actually seeing how much it correlates to the S&P future, right? So let's start. So we start on the 23rd of August, right? Let's see what I did. 1.5. This is how I usually look in the market. What is he doing at this level? I'm saying to myself, what is he doing? What is he doing? So I'm commenting the 31.5 for a possible long entry. As you have observed, I was clicking my mouse while I was trading on this level. That's the previous hourly low. That's the next step actually. If the market's bullish, it should stop around 31.50 and have a straight line to visualize it in the 1 minute S&P chart. Let's see how it develops. Which it should go now to 31.5 really. Again, moves with these volumes, you do not, it's like they never happen. Don't even, forget them. You need, for real moves, you need real money. If moves are happening with no money, it means they can totally reverse to the other side with the same volume. Yeah? So it's market makers playing. You don't want to get trapped in this. Let's look at these figures. Yeah, 52 for the manufacturing, 49 for the. At the same time, we're expecting some figures. I think they're coming. They were coming. We're actually 1 minute. So that's the German time. It's live while I'm trading. You can see the date, the 23rd, and it's 3:44. The market opens at 3:30. Right. Let's see how that is. And sorry, yeah, and 49 for the services. Right. 31.5 in S&P. Yeah. Let's go out. A little bit lower. Wow. By the way, the video is not edited, so I'm gonna be fast forwarding into to what happened actually in the next like 10 or 20 minutes. So it's gonna be you're gonna see some candles like 30 or 40 points higher. Just wanna show you the whole move or what was the possible point of entry and what was the possible point of exit. There is no point on just showing you the whole video. Obviously, I didn't hold all the way up to the high. To be honest, I don't think I actually traded because it was actually before the figures, just an indication of how I usually call trades or how I usually trade myself. Yeah, you're going to see in the hourly stood exactly at the 31.50 as well. Yeah, let's move forward. That's going to go at least at 348 or 350 in the next few seconds. Yeah, as you can see, I'm just going to pause it. And I'm going to unpause it because as far as I remember, it went a lot higher than there. Let me just see. Oh. Well, that changes things. Nothing in the hourly. What's the... Alright, so then we're moving on to the next trade, 31.50 hold it. I'll just put the Fibos to check if the 44s we're going to hold. The hold of the 50%. And let's see what's for my next trade. S&P hourly, nothing. I went in no man's land. We have to break these 57s for something to happen. Yeah. Right, so what I'm essentially saying is that I don't want to do anything. Since there was such a long consolidation in the hourly chart, the only trade I want to do is to play the break of 57s. The break of 57s, I know it's quite a small screen right now. That's the best I can get. is the actual high of this consolidation range between the 23rd and the 24th. Actually, on the 23rd, actually, between the 22nd, sorry, and the 23rd. Right, let's see what the market did. Now, playing the breaks, there is no other, there is no easy way around it. You just have to be pretty confident it's going to break at some point. You have to be a little bit lucky, and it requires a little bit of experience. Some people, they like to buy a few ticks before the level. Some people like to buy at the level. I personally like buying exactly the break, so exactly 57. If I do not get the 57s, it doesn't matter. It's like a missed trade. So I do tend to miss a lot of trades. Many traders do. There is nothing wrong with that. But on this case, I remember I got the 57s. Let's see what the market did. Let's see. Maybe we buy the. We will see. Because of Nasdaq, is it? So as you can see, broke the 57s. There was an up move up to 62. That was a usual amount after 5 points. So I'm guessing I would have exited, especially since it rains for so long in the 1 minute chart up there. So 57s are done. That for me was a false break as long as it fell before the 57s and before the hourly close. Next trade, let's go. See? Look at 53 and 54. So I'm actually calling for a long at 54. That's a first Fibo, and it was a small. There was a small hourly high at 53. I remember this one. I think it was this one. So that was between 54 was the first Fibo, and 53 was the previous hourly high. That's why you should have orders in. Wait the market to show you. Stops at first Fibo. A euro reversing a little bit. Alright, so that trade is done. I'm guessing it went up to 59, so close 60. Again, on low volatility, I tend to take 5 to 10 points. Some trades, they go a lot more than others, but on general, you got like 2 big moves per day, and then the market pretty much quiets out. And you have to understand that was before Friday the 26th, which was quite a big day. I'm going to come to this day as well later on. And there's actually no point of going, at least in my case, for going more than 5 to 10 points on this kind of market, slow volatility, and it's pretty slow. It was pretty slow moving for between July, actually in July and August, not between. So in July and August, it was volatility was quite low and not that hectic. So 5 points are more than enough. So as the 10-year bonds, 53. As you can see, as you heard, the 53. That's my next short. As you can see, all the trades are you have enough time to follow my trades if you want to, or at least I'm giving all the trades in advance. I don't go after the dance 53 is holding or 57 is holding. I'm saying what I trade, so I cannot fool people around. Yeah, so I'm calling 53. I don't think I'm gonna trade it. Ωραία, Right, so 53, 53, yeah? Yeah, I'm gonna repeat myself, so 53, that's another small, beautiful trade. And I think I have one more for you, that's on the 25th, as far as I recall. That's gonna be the next trade, I think it's gonna be the last one. Let's check. So you steps. You missed the short in 57. The next one is 53. So what I was actually saying over there, I mean, that looked like a false break, as I told you before. You remember the long of 57s, the market was failing it, the bonds were going down, which means interest rates were going up, and I just didn't like it anymore. That was not a good break. It didn't even manage to go even to the first Fibo. I was as you can see, the volumes were very low, and I tried to sell the 57s. I didn't make it. So all I'm saying, in trading, if you miss one level, there's no point to start chasing the market, just selling wherever you want to. Yeah, you just to realize where the second point of entry is, and at the end of the day, big moves or fast moves, they don't happen near your price or near the bottom or the top. Yeah, fast moves happen where people are stopping out and they are exhausted of their trades. Yeah, some people average as well, and that's when the moves happen. So, an example of I wish there was an example because that was a very slow moving day. Yeah. So I would say a good break would be below those 41.50s or 40s. What is it? But let's not talk too much. Yeah. Look at 76, just in case it does 76. So that's the next trade. The market spiked for absolutely no reason. 76s were this hourly low. That was the reason behind my. I usually don't want to go contrarian the S&P, but that was a failed break, and I just didn't trust the upside so much. And 76 was quite a fair level. It wasn't only this hourly low. As far as I'm aware, there was another daily high or daily low. You cannot actually see the daily S&P chart over here, so I don't really remember. So it was a double level, as I call it there. Okay, let's go. Should be selling 76. That's way too much. So 76. That was a beautiful one. Look for how long. I mean, I called it well before the actual market went to 76. So that's not the I would say that's not the best way to trade it. Usually, when something is a level, it will hover around it for quite a while. So there is no real need to be hasty and impatient. Sometimes I'm impatient, but that's who I am. If I spot a level, I just want to trade the level, and I don't care if it trades another 3 or 4 minutes around it. I have my stop, I have a profit target, and that's it. Yeah, let's go. So 76 hold it, went down to 68.50. Maybe I have another trade. Let's see. In case you wonder what 72.50 is, it's this high here, yeah. Unfortunately, I was muted. So all I'm saying is that I said the 72.50 was a 5-minute high over there. And since the market tried to go down, it closed above this level in the 5 minutes, so that was a false break. Some longs took some stops or there was some profit targeting over here, profit covering, sorry. And just although I hated the up move, it's just I don't care. I'm gonna do what the market does. I'm here to make money, regardless of what opinion I may have for the market. And as I said, if you watch one of my previous videos, opinion kills. Just do what the market wants to do. So 70, I want to go long, but I didn't want to go long 72.50 because the volume was too low. And what did I say before? Moves happen at the extremes. Moves happen when people are trapped. Yeah, right. So I want to see 72.50 holding, and then I'm going to play the break of 76. Again, there is no easy way to play the breaks. Practice makes perfect in breaks. So as a step, it has to hold. I want to see holding 72.50 before playing the break at 76.25. Yeah. So I'm repeating myself really, because that is going to be the next step. Now, with this volume, I don't know how good. I cut myself short. I don't know how good the break will be. Boom. So from 76.82. I don't know how long this move goes. I saw the video ended. That was it for the 23rd and the 25th of August. I was gonna make a video on the 26th, but I didn't trade it very well. I was caught on the roller coaster at the Powell speech. I did record it. I did have one good trade. It's just I was so impatient and so undisciplined after the move that I didn't trade it very well. Again, I'm a normal person that trades and have a few years of experience in trading. Yeah, I'm no god. I'm just trying out of experience to figure out level and technical analysis, of course, not only experience. So obviously you're going to be seeing the trades that go on side. If you're going to follow the channel, you're going to see all the trades that go offside as well. Right, that's about it. The reason I'm doing this video and I'm restarting again, it's because I think volatility is going to pick up again. And I personally think we're going to be having some kind of May or April days where they're going to be quite hectic and quite with high volatility, right? So tune in and let's rock this place, no? I'll be seeing you.